Hello and welcome to another lecture on basic macroeconomics. Today it's our lecture number 10 on basic macroeconomics. We studied the three sector model in the circular flow of income, and today we are going to study the system of injections and leakages in a three sector model. Now we have already studied this thing that the household sector pays taxes to the government, mostly direct taxes, and obviously this becomes a source of revenue for the government. Then the business sector also pays taxes to the government and mostly the indirect taxes, and this also becomes a source of revenue for the government. Now these two combined can be thought of as total revenue for the government in a three sector model. Now, on the other hand, the the government sector makes expenditure on the household sector in the form of salaries and wages plus transfer payments, which we have already discussed. And also, the government sector makes expenditure on the business sector through by buying goods and services from the business sector plus providing subsidies to the business sector, and then this becomes part of expenditure, and this also becomes part of expenditure for the government. Now we can understand that this is the total expenditure for the government and this is the total revenue for the government. Now the relationship between revenue and expenditure is expressed by different governments through budgets. What is a budget? Budget is a statement of revenues and expenditures, or total revenue and expenditure of any government for a financial year. Now, depending upon the relative magnitude of revenue and expenditure, there are different types of budgets and budgetary policies. So it depends upon the amount of revenue in relationship to amount of expenditure that the government has. Now let us first focus on different types of budgetary policies or budgets that can be utilized by governments. Now again, we need to keep in mind that it depends upon relationship between revenue and expenditure. Okay. Now we have three types of budgetary policies, or we have three types of budgets that can be utilized by governments. The first one is what we call as balanced budget. Now in this case, the revenue of the government, total revenue of the government, is equal to total expenditure. Okay, and as we move ahead to the public sector, when we will study budgets, then we will come to know that this is also called as receipts. The receipts of the governments, it is equal to the expenditure of the government. Now, if this is the case, then this type of budgetary policy or this type of budget will be called as balanced budget. Now, in this case, whatever the government receives as its revenue, the same amount is spent uh, as as expenditure of the government. So nothing is left with the government. It neither has a surplus of funds with itself, nor has it any loans or debt incurred, because it is spending only that much which it has already acquired from received from the economy. Now let's come to the second, surplus budget. Now what is surplus budget? When revenue is greater than expenditure, then we call the budgetary policy, or we call the budget as surplus budget. Now obviously the government is receiving more revenue, and in comparison to revenue, it is making less expenditure. And it has surplus of funds with it, because part of the revenue that it receives from the economy, it is not spending back on the economy, it is just keeping that amount with itself. So there will be surplus in this case, therefore it is called as surplus budget. Now let's come to the third. It is what we call as deficit budget. Deficit budget. Now what is deficit budget or deficit budgetary policy? So when the revenue of the government is less than the expenditure, so the government is receiving less revenue in comparison to the expenditure that it is making. A question may arise here: how come it is possible that government expenditures will be more than the revenue it receives? Actually, this is possible because governments may publish new currency, or they may borrow money from international market or domestic market. Okay, so normally, what the revenue they receive, we add the new currency, or we add what is borrowed from domestic market or international market, and therefore the expenditures of the governments will be more than the revenue they receive. Now, in this case, obviously, it is a case of deficits because we are having less revenue and more expenditures, and government either publishes new currency or it incurs debts in this case. Okay, so this is one more type of policy that the government can adopt. Now, our concern with the three types of budgets is how will the system of injections and leakages operate in these three different types of budgetary policies. Now, let's move to the first one, balanced budget. Now, in this case, obviously, the revenue is equal to expenditure. Revenue is equal to expenditure. So, whatever the government receives, uh, this is circular flow of income. So whatever the government receives, it gives back to the circular flow. Nothing is taken off from the circular flow of income, so there will be no impact at all vis-a-vis with respect to leakages or injections. Neither injections nor leakages will operate in this case. However, when we come to the surplus budget, the impact will be different because in this case, revenue is more than expenditure. So, what happens is that from the circular flow of income, we are taking part of it. So, for example, the government is receiving 100 rupees and it is making expenditure of 80 rupees, and it is keeping 20 rupees with itself. So the 100 rupees that the government received from the circular flow, it is giving back only 80 rupees to the circular flow, and the consequences will be that there will be reduction in the circular flow of income. The volume of circular flow of income will get reduced by 20 rupees. So this will be a case of withdrawals, or what we call as leakages. Now when it comes to deficit budget, again the revenue is less than expenditure. So what happens in this case is, this is our circular flow, and the government is taking 100 rupees from the circular flow, but it is making an expenditure of 120 rupees. That is, it is putting back in the circular flow, taking 100 rupees from it but giving back to it 120. So there will be increase of 20 rupees in the circular flow, or we can say the volume of circular flow will increase. So this is a case of what we call as injections, because more funds have been injected by the government into the circular flow of income. So we can say the balanced budget has no impact in terms of leakages and injections. The surplus budget creates leakages. It creates leakages or withdrawals. Okay, and the deficit budget, it becomes a case of injections into an economy. Now, this will reduce the volume of circular flow, this will increase the volume of circular flow, and this has the potential to stimulate the economies. Now, recently in the COVID-19 pandemic, different governments adopted expansionary economic policies in which they increased money in the circular flow of economy. They try to increase the demand through it, and if it is possible, demand will increase and supply will at the same time increase. If that is possible, then obviously our production will increase, our employment will increase, so all the variables will move in the positive direction. So this is a possible impact of these injections. However, they have their own limitations, as you will understand at appropriate places where they are to be discussed in our subject. I hope that you have understood the concept of injections and leakages that operates in the three sector model. Do subscribe to our YouTube channel, Macroeconomics. Thank you very much.